The stock market has been hot in 2023, and you're wondering what stocks are still attractive to buy at these levels. I've got two stock picks for you today. One's in cybersecurity and one's in ad tech, and you might be surprised at what you see in this video. One of these stocks is a hidden gem. It's a small cap company. It's actually a micro cap company under a $2 billion market cap, and it's profitable. Let's find out which stock it is. So the first stock, when you think about megatrends, you think about cybersecurity. It's a huge megatrend. There's lots of total addressable market in cybersecurity. So here's a best in breed stock that's laser focused on cybersecurity that can help your portfolio capture some of that growth. CrowdStrike is a leader in endpoint security, and CrowdStrike pioneered pure AI solutions in cybersecurity all the way back in 2011 with its Falcon platform. So with over a decade of experience, 12 years of experience, and all the data that comes along with that, this creates a competitive advantage for CrowdStrike. And of course, CrowdStrike does have competition from big companies like Microsoft and smaller companies like SentinelOne. But the more data that you have to train on AI platforms, the more effective they become longer term. And I do believe this creates a competitive advantage for CrowdStrike, and it's why they keep winning deals against companies like Microsoft. And you can see the growth here recently, 41% year-over-year growth, over 23,000 clients going into this year. And CrowdStrike services 556 of the Global 2000, 70 of the Fortune 100, 270 of the Fortune 500, and 15 of the top US banks. So this speaks volumes about how CrowdStrike can go to bat and win business against their competition. Now, CrowdStrike's ARR, or annual recurring revenue, it's currently $2.73 billion. And their goal is to hit $5 billion by 2026, just in 3 years. And this ARR has a compound annual growth rate, a CAGR of 79% over the past 5 years. And it's safe to say it'll be hard for CrowdStrike to do that again, 79% again over the next 5 years. But even if they do half of that, 50% of that, they're still going to meet that $5 billion goal by 2026. Now, McKinsey says that cybersecurity has a $1.5 trillion to $2 trillion total addressable market. That's massive. And the estimate is that only $150 billion of that TAM is actually penetrated today. Now, 23% of CrowdStrike customers use 7 or more modules. 40% use 6 or more. 62% use 5 or more. And that shows you there's room for growth. And they do have this 120% plus dollar-based net retention. So customers are staying with CrowdStrike, and they're also continuing to add more modules. And then CrowdStrike continues to develop new modules as well to sell to existing customer bases. And of course, customer wins only matter if CrowdStrike can keep the customer there. And remember, this is recurring revenue. They don't have to go to bat to fight every year. If that customer comes on board, they're paying every year for this service, software as a service. Now, CrowdStrike retained 98% of its customers in the first quarter of fiscal 2024. And it has a gross retention rate of over 97% since 2019. So this is proving to us that CrowdStrike is winning deals, and they're keeping customers happy, and they're staying on the platform, and they're continuing to add more modules. So again, over 23,000 customers, and many of those large Fortune 500 and Global 2000 customers. They're really focused on those larger enterprise type customers, where SentinelOne does a lot more S&B, those smaller and mid-sized companies. But overall, this here is a formula for long-term success, and I think this company is going to continue to do well over the next 5 years. So right now, CrowdStrike is trading around $150 a share. I'll show you a chart here later, show you some price targets. Before that, let's look at some valuation metrics. So the market cap right now on CrowdStrike's about $35.7 billion. So just back in January 10th, it was $92. Now it's $150. Back August 11th of 2022, it was a $205 stock. So right now, under 3% short interest percentage. That's just really telling me that the stock might be attractive here. You know, bears are not shorting this stock and trying to get in front of the train. So it could be an opportunity here soon. Looking at some of the growth metrics here, you can see revenue growth 5 years, 79.96%. Last 3 years, about 67%. And then the growth TTM versus prior TTM is about 50%. So this has been really solid. Now looking at price to sales, it's 14.51. And that is expensive, but remember, this is SaaS, software as a service with that recurring revenue. So I'm going to look at some other metrics here in a second as well. Now what's interesting here is the PE for next year's estimate is a 48.1. And that's not dirt cheap, but remember, this is a SaaS company, and historically, this is the least expensive this stock has really ever been. It's really grown into its valuation over the past couple of years. This stock's traded in range. If you zoom back to 2020 and 2021, this stock has been a roller coaster and it's continuing to grow underneath the hood, not just in revenue, but also improving those financial metrics to get to the point of profitability next year. So with SaaS companies, we like to look at EV NCM revenue and that multiple. And CrowdStrike's at a 10.7x. For comparison, Zscaler is trading at about 11.5x. Datadog is a 17x. Cloudflare is an 18.1x. MongoDB, 18.7. And Snowflake's over a 21x on that EV NCM revenue multiple. So I would argue that CrowdStrike at a 10x on this multiple, it's undervalued to its peers, especially if you look at Zscaler, which is in cybersecurity, it's at 11.5x. And in my opinion, it has more risk, especially with Microsoft coming into and competing directly with Zscaler in recent news. Now, of course, Microsoft also competes against CrowdStrike because Microsoft has endpoint security, but Microsoft's had this for years, and CrowdStrike's been competing and doing well against Microsoft for years. It's more of an unknown with Zscaler because we have to see. A couple more metrics quick on CrowdStrike. 31% free cash flow. That's the 7th best for all the SaaS stocks that I cover. So names like Adobe and Viva have higher free cash flow, but less growth. Rule of 40 for CrowdStrike is 73%. Now, the only cloud SaaS name with a higher rule of 40 is Snowflake, and it's only 1% higher at 74%. And Snowflake is a consumption-based model. It's not even that true recurring software as a service model like CrowdStrike is. So CrowdStrike has a comparable rule of 40 to Snowflake, and it's trading at half the valuation, around a 10x EV/NTM versus a 21 plus for Snowflake. Hey, I hope this video is helpful so far. I just want to interrupt to thank you for watching. If you're new here, subscribe and click that bell for notifications. And if this video is helpful, drop me a like and drop me a comment. I appreciate you guys watching. Enjoy the rest of the video. Next, let's look at a chart for CrowdStrike. Now, when you look at these charts, when you see orange text, that's previous chart day. We do chart day every single Wednesday in Patreon Discord. And if you see yellow, that's today's chart day. For CrowdStrike here, there's not going to be any yellow text. I'm just going to talk through it. So I did a video recently on YouTube, and I said that I like CrowdStrike $150 or less DCA, dollar cost average, for long-term investors. And just this Wednesday, we did chart day, and I said same. Earnings are August 30th, and that could make the market move. And, mega cap tech earnings next week could make the NASDAQ sell off, including names like CrowdStrike, or earnings could come in and beat, and you could see the market go higher. But you have to know that anything you buy here, it is expensive, but we're looking for stocks that are still attractive if we're thinking longer term. I obviously like the stock much better below $100 a share, but you're probably not going to see under $100 a share again unless something catastrophic happens. So is this still attractive at $150 or less? Based on the analysis I just provided, I think that's the case. And if the market does hold up and earnings are good, and if CrowdStrike has positive earnings, $170 is that next stop on the R3. These are Fibonacci's here, and this is the Fibonacci retracement and pivot points. And you could see this stock well over $200 in 12 months time, especially if they come into profitability and they're still continuing to have impressive growth. All right, I got one more stock pick, and this is a small cap stock, and you might be really surprised at some of the information, the numbers I'm going to share with you. This could be a diamond in the rough. This could be a hidden gem. Before I do that, if you're new here, subscribe to the channel, click that bell for notifications. If this is helpful, drop me a like and drop me a comment. I'm trying to get this channel to over 50,000 subscribers this year. We're already at 45,000, but let's keep the momentum going. And I need to announce that this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. And if you want to join our private community, Patreon Discord, visit patreon.com/firedupwealth. Next, I'm going to share a small cap gem. This is really under the radar. It's actually an AI play, and it's also an ad tech play. And to top it off, it's actually profitable with a PE ratio and not a very expensive PE ratio at that. So when you think of ad tech and best in breed, Trade Desk is my favorite pick. And most ad tech companies, they really focused on one side of the equation. So there's really two main sides. You've got DSP, which is demand side platform, and then SSP, which is that sell side platform. What's unique about Perion is that it does both sides. So it connects both buyers and sellers through what they call their intelligent hub. They also have a fairly new product called Sort, and that's a direct competitor to Trade Desk. They call it an upgrade from third-party cookies. And if you've been following Trade Desk, you know about about Unified ID 2.0. Perion claims that SORT actually has better privacy protection than the trade desk, and it is starting to gain traction. 93% spending up and 142% increase in the number of customers. And this isn't hyper growth by any means, but when you see that valuation, you might be surprised because the growth is attractive for the valuation of the stock. And the financials continue to improve. When you look at the compound annual growth rate here, 89% and then 38% year-over-year growth. And this is adjusted EBITDA. And the rule of 40 here, the TTM rule of 40 is 49%. That's really solid for a company that has a low PE ratio. So rapid fire growth drivers. Number one, direct response search advertising. And you can see the numbers are trending upwards. Number two, retail solutions. Also impressive growth here. So at the bottom of the slide, you can see some of its customers. These are retail and consumer product good customers. Rite Aid, GSK, Procter & Gamble, HEB grocery stores, Crayola, and more. And SORT could be a big deal here. 142% year-over-year increase, 157 customers. And that spending, again, 93% year-over-year increase. Growth driver number four, video platform. I think this is a good slide to kind of show you all the different services there at the bottom. So video revenue is up 26%, the platform publishers up 63%, and that land and expand, 71% year-over-year growth. Growth driver number five is iHub. So optimizing operations through this iHub technology. And on the right-hand side is supply. So you've got social network, Amazon, Facebook, Twitter, and so on. On the left side is demand, and it really connects those two together. So the ticker on this is PERI, P-E-R-I. And right now, this is a trailing 12 months PE ratio at 16. It's a micro cap, $1.59 billion. And this stock has rallied hard like a lot. Back July of 2022, this was a $17.96 stock. Now it's $33.91. It was down 5% on 4.5% on Friday. And the 52-week high was April 17th of this year, 2023. It was a $42.75 stock. Short interest is 1.64%. Now this next part is huge. So Perion has a partnership with Microsoft, and ChatGPT and Bing could actually help boost growth here. So for every $100 on Microsoft for Bing, Martin estimates that Microsoft keeps 15 to 25% and pays out 75 to 85% to Peri. And she estimates that then Peri keeps about 25 to 30% and then pays out 45 to 60% to the publisher. And this analyst at Needham here, Laura Martin, has a price target of $42 with a buy rating. So this says once Peri launches Bing to a new client, 100% of the ad units on Bing search engine results are exclusive to Peri. So again, Peri is a distributor of Bing globally, so all over the world. And Microsoft's given them the rights to put Bing on browsers, devices, and websites globally for a share of the ad dollars. This is pretty big. And you can see the growth is solid here. EPS growth 45%, 78% here, 61% for 3-year historical. And down here, revenue growth 3 years, 35%, 5 years about 19%. Again, not hyper growth, but solid numbers. And frankly, this is where I scratch my head and say, what are we missing here? We got to be missing something, right? Because price to sales ratio 2.33, price to book 2.56. But look at some of these numbers here. Next year's estimate, the PE ratio 13.6. You're talking about a micro cap here, $2 billion, under $2 billion. It doesn't take much for a company like this to grow. So a 5x, a 500% return on the stock, this would still be under a $10 billion market cap. And so normally it would be a speculative investment, but then you look at the PE ratio, next year's estimate 13.6, and it's looking like a value stock. So if you know more about this company, drop me a comment below. Tell me what I'm missing. And looking at a chart, this was 42.75 and it's pulled back. And you have to be careful chasing. This did run hard like a lot of different stocks, but this is getting attractive. It's bouncing off this moving average here, this 50-day. And this Fibonacci pivot point, this S3 is about $27. So I think if this stock could hold up kind of where it's at, trading around $33. If it goes any lower, I think it's an opportunity. If this stock gets below $30 a share, I think it's a great opportunity. I think it's attractive even at these prices. Make sure you subscribe to the channel, click that bell for notifications. If this was helpful, drop me a like and drop me a comment. Have a great rest of your day. Take care.